Hi, are you a working professional looking to accelerate your journey to financial freedom? Welcome to this presentation by SmartWealth.ai. In this, we are going to discuss our product portfolios that will help you accelerate your journey to financial freedom. When I was in my mid 30s as a working professional, I was looking for accelerating my journey to financial independence, and I saw only fragmented solutions around which were very high risk, poorly diversified, and were missing out on alpha. There were solutions that would give you sporadic wins, but they did not have diversification. Those that had diversification did not have asset class balance to tide over multiple market regimes. Those that had asset class balance simply did not have enough alpha to accelerate the journey. And I felt that solutions were actually bits and pieces of the overall puzzle, not exactly a solution for the entire puzzle of accelerated financial independence. That is why I decided to solve this puzzle myself. And we solved this puzzle using our framework called Diversified Momentum Investing. This essentially has 5 levels of diversification for serving 4 types of investor personas using 3 strategy pillars. If you want to see more about our genesis, about our journey and genesis of diversified momentum investing, do check out our main video on the home page. But for now, let's get started with diversified momentum investing, which has 5 levels of diversification for investor personas using 3 strategy pillars. These are those 3 strategy pillars. One, stocks portfolio as a pillar, assets portfolio as a pillar is 2, then 3 factors portfolio as a pillar, and then combination of these. Now let's look into the stocks portfolio. We have 2 types of stock portfolios. One is diversified stocks portfolio, other is thematic stocks portfolio. In diversified stocks portfolio, we essentially form portfolio of stocks that are diversified across sectors, themes, and market capitalization levels. Whereas in thematic stocks portfolio, we form portfolio of stocks that are from the top 3 sectors at that particular point of time. So really, this is a sector and theme rotation strategy. Let's do a side-by-side comparison of these two to understand the differences. So in a diversified stocks portfolio, the universe consists of the entire liquid stocks, the stocks that are trading more than an average of 10 crore per day. Whereas in thematic stocks portfolio, in addition to being liquid stocks, they must be a member of an NSE index. And there are 110 or more, slightly more number of indexes that they must at least be a part of one of them. The core philosophy of diversified stocks portfolio is diversification across sectors, themes, market capitalization levels. Whereas in thematic stocks portfolio, the core philosophy is rotation across top 3 either sectors or themes or market capitalization levels or even strategies, which is factors like alpha, low volatility, equality, and so on. Now let us look at specifically the portfolios that are available to invest using these 2 ways of investing. So in diversified stocks portfolio, we have 2 options. One is Aspire, which is a combination of 5 stocks, and you can invest up to 5 lakhs in this. The second option is Sprint, which is a portfolio of 30 stocks, and you can invest up to 25 lakhs in this. Whereas in thematic stocks portfolio, we have only Sprint option, which is a portfolio of 15 stocks, and you can invest up to a 25 lakh rupees capital. In diversified stocks portfolio, the stocks will get diversified with debt and hedged with gold as and when needed. Whereas in thematic stocks portfolio, the portfolio is 100% stock focused. It does not have debt diversification or gold hedging. The diversified stocks portfolio is rebalanced once every week, typically on Thursdays, and the right time to invest is on Thursdays after executing the rebalance. Whereas in thematic stocks portfolio, it is rebalanced once a month, typically on the last Thursday. and the right time to invest via SIP or lump sum is after rebalancing on the Thursdays. Now let's see how diversified stocks portfolio would make allocation decision in different market regimes. So when the market is fully bullish, is extremely bullish, you may see that the entire allocation is made towards stocks, whereas when it becomes slightly less bullish, you may see some part of allocation is made towards sector ETFs, and when the market becomes sideways, you may see that the allocation has been removed from stocks and it has been made towards debt and sectors. And when the market becomes somewhat bearish, then you may see that we may exit equity altogether, that by way of exiting sector ETFs as well, and large part of allocation may be to gold and little less to debt. And when market is very bearish or is in a crash like situation, you may see most of the allocation is made towards gold. So essentially, by way of responding to the market regimes, it allows you to achieve a high risk adjusted returns while controlling drawdowns, the both depth and intensity of drawdown, as well as boosting returns over long term. It has the objective of this strategy is to outperform the market while managing risk. It has 4 adaptive layers: the plan A, plan B, plan C, plan D. Plan A consists of the momentum core, which is building your stocks portfolio, which is diversified stocks across sectors, market capitalization, and themes. It has 3 levels of check. It checks for stocks that are rising, which is regime check, the stocks that are liquid, so you can enter, exit easily, volatility check, so that portfolio does not have wild swing. The stock selection is in the universe that qualifies on these 3 checks, and then the stocks that are at the top of momentum ranking are selected, and then equal allocation is made so that the allocation is unbiased as well as balanced. It's reviewed weekly. When we do not find enough stocks that qualify all the rigorous checks, we may allocate some amount to sector ETFs. This is a way to remain in equity without necessarily staying in stocks. When we do not find enough stocks, even after filling sector ETF, then that is when the debt diversification gets activated. And if even more allocation is remaining, then even a gold hedging can get activated. And gold hedging is necessary to control the overall portfolio volatility. The execution rhythm is very simple. It is reviewed typically on every Thursday of every week, or rather Thursday of every week. And the right time to allocate your capital is first week of month, because on the last week of month we make major reallocation decisions. This portfolio is available in 2 sizes. One is Aspire, which is a 5 stocks portfolio. You can invest up to 10 lakhs in this. The second is Sprint portfolio, which is a 30 stocks portfolio. You can invest up to 25 lakhs in this. So now let's look at the other one, which is Thematic Stocks Portfolio. This is a theme and sector rotation strategy, and it participates in the top 3 themes or sectors by way of choosing the stocks which are a part of those sectors. So the universe here is the 4 types of the indexes that we have in NSE. So we have thematic index, themes such as defense, energy, manufacturing, or railways. So a theme typically cuts across several sectors. So defense, for instance, might have a manufacturing element, might have a technology element, might have telecom element in it, or even have chemical element in it, and so on and so forth. So the sector is, for instance, bank, pharma, metal, industry. These are self-explanatory. A strategy is what we typically call factors. So we have alpha, quality, value, low volatility, or could be a combination of these, or a slight derivatives of these. The last one is broad-based factors. This is market capitalization level, small, mid, large, micro. So really we have the flexibility of choosing 3 sectors which may cut across these 4 categories. So at the top you see illustrative. So dynamically at every month we choose three sectors. So it's possible that we may choose one theme, one sector, one strategy, or one theme, one sector, one broad based, or you can have more than one theme or more than one sector. So all those combinations are possible. Say for instance, when the defense as a theme is rising, you don't necessarily need to subscribe to a defense portfolio. If you have subscribed to a portfolio which is a rotation portfolio, this portfolio will automatically detect whenever defense comes in momentum, or when energy comes in momentum, or even bank comes in momentum. So you don't really need to subscribe to many themes or sectors. You don't need to have defense, bank, energy, metal, all of these as separate subscriptions. By way of a sector and theme rotation portfolio like this, you automatically get participation in the themes and sectors that are rising. So let's look at the specific step-by-step rules for this thematic stocks portfolio. The objective of this is to take high risk, to be able to deliver a high performance over a longer period of time. This may not necessarily perform in short term. So that is for investors to watch out before you subscribe. Be really sure you want to try this. As I mentioned earlier, the universe is 4 categories of indexes: thematic, sectoral, strategic, and broad-based. The first step in the process to select the index. So we first do a correlation check to identify uncorrelated indexes. So we identify a small set of uncorrelated indexes from a large set of 100 plus indexes. So these have a unique response to a regime. The second is we quantify the momentum for these uncorrelated indexes, take the top 3 sectors or themes. The sectors or themes that are stable are for, the stability of this is prioritized using regime filter and volatility filter. So really the 3 indexes we choose, the 3 sectors or themes we choose, they are uncorrelated, they have unique response to a market regime change, and they are more likely to be stable because they have been identified using regime and volatility filter. Once we've identified these 3 indexes, we identify the 5 stocks per index to participate in. So we only look at the stocks that are a part of this index, which are a member of the index. The second criteria is they should be liquid, and third is they should have a long track record. So we in fact choose the one which have the longest track record. And once we've identified 5 stocks from each of these 3 indexes, we have 15 stocks identified. We make an equal allocation for unbiased exposure. This strategy is reviewed once every month, which is last Thursday of every month. So the right time to invest in this is last Thursday of every month after you applied the rebalance, if any. You can invest up to 50 lakhs rupees in this portfolio. On our website, you will see a lot more detail about our products. You will also see very informative blogs, FAQs, and testimonials. If you have any questions, do not hesitate to reach out to us. Our contact details are here. Thank you for watching, and we hope to see you soon.